No sound. All right. Let's do that all over again. Okay, hold on. All right, how's that for sound? All right. Fix that problem. All right. How you doing? This is Ernie here, and this is the final hour of expiration at 0 days to expiration podcast, website, service, extravaganza. And this is actually an experimental trade that we've been going on now for quite some time. You'll notice in the thumbnail as well as the description, it's showing that this is now the #1 trade out of the next 50. Now, we just completed doing a little bit more than 50 trades prior to this. And that trade, I was starting a little bit later than I'm starting right now. I was starting at about 3:15 in the afternoon. Now I'm starting at quarter of. And the idea here is that we have some evidence that shows that the earlier the trade is put on, the better the result. So we're going to start a half hour early, try to put the trade on a little sooner for that final hour. And so that's what we're going to do. It looks like great. Definitely have sound now. All right. So why don't we start by going to the charts, and we'll check out what we did today. And off to the charts. All right. Looks good. I just have to do a little house cleaning here. Rearrange the furniture. There we go. All right. So this was the setup for today. Now, what we do is in the morning, I provide an analysis. Everybody does their own analysis, but I provide an analysis for the group that includes a volume profile analysis. As a matter of fact, if you go and watch the previous video, you'll see that I did that volume profile live on this channel. But every Monday, we do a clean slate analysis and then do a geo-macroeconomic analysis as well to try to determine the vector of the market. What I mean by that is its direction and its magnitude of its direction. It's a very scientific way of thinking about which way the market's going and how strong of momentum it has. And so this morning I came up with that. And then after we do that, I come up with what I call scenarios, and you'll see them right here on the chart. They're the little yellow arrows. And there are usually two scenarios. There's the S1 and S2. S1 being the one that I favor the most, S2 the secondary one. And they're usually a bullish and a bearish scenario. Now, if you notice, I chose S1 as the favored scenario, but I must admit that I chose S2 to actually trade today. So that was a mistake. But anyways, that's okay. It's one of 5 trades. Actually, it'll be one of 10 trades considering that we're doing these final hour trades. But these are not official trades. So we're not counting them against our service. Although we should, because they come out pretty good. Anyways, back to the task at hand. So anyways, some people did take the bearish trade, and they did very well. And obviously the bearish trade won out. My original analysis was that it would come all the way down to the bottom of T1. T1 is a volume node, right? So every time you see one of these big parallel lines with the shaded area, that's actually showing a historic volume node. And the green lines are what we call LVNs, or low volume nodes, or low value nodes, or whatever you want to call them. They are the lowest point in between volume nodes. And they have significance as well. And we use those to collectively create what we call the market structure. Once we know the market structure, we can then create scenarios, and we can do a behavioral analysis because we have a certain methodology that says market will behave this way when a market vector comes into the market structure, and starts interacting with the edges of the nodes and the LVNs. And so that's generally how we come up with the scenarios. And from there, we then model a trade, which always um, which is always a symmetrical butterfly of varying width or whatever, based on our criteria and trying to get the best risk to reward that we possibly can. We put on asymmetric trades, putting on tiny risk with large potential reward. That is essentially what we do. Now, these two boxes that you see here, the cyan and the peach colored box, those are the two trade ideas that we had for today. All right. And obviously, the peach one won out, went right through it. You would have had to obviously taken your trade sometime before it went all the way through, although it's probably still worth a little bit of money right now, but probably not too much. But it went right through it, and that one worked out well. The other one, not so well. And as I said, I took the other one, so that was on me. And I know that I had noticed something today. I was looking back at all of my previous trades, and when I put out a scenario in S1 and S2, I rank them that way: S1, S2, S1 obviously being my favorite. And maybe something happens during the day or as the morning moves on that takes me off of that idea, because I do these, usually before the market opens. But going back, I'm finding that the times that I chose not to go with S1 have not been as successful overall. So that's saying something. It's saying that, hey, Ernie, maybe you should listen to your own stuff. Now, that's not to say that, an S2 can't happen. Of course it can. And I have had very successful S2 trades as well as S1 trades. It's just that I've found that more often than not, choosing S2 over S1, I haven't fared as well as just choosing that trade, right? All right. So anyways, I just wanted to point that out. If you would like to see the performance of our service, and it's not really the performance of our service, it's my performance, my personal performance. Everybody's performance varies with whatever their particular skill level is, where they are in terms of their understanding of the strategy, the methodologies, and the process, and their experience, et cetera. So everybody has, different results. But I think what I have up there is representative of what most people can achieve. My performance is probably a little bit less than what it could be, because a lot of times I have to get out of trade so that I can manage the service. And I know that sounds like an excuse, but it's true. And sometimes I have to do a live stream, so I get out of a trade because I can't sit there and babysit it. So there have been several cases like that where I could have achieved better profit, but still, you could chalk that up for just what could potentially be human error in anybody's trading. I mean, if we could all like back test a trade and say, okay, this is what we should have gotten, we know that we wouldn't have been perfect that way. Maybe if we were a computer, we would have, but in most cases we won't. So it is what it is. Go back to the website, to the trade log, and you'll see what the performance is. It's fantastic. It's I just started keeping track of it, by the way. There's about a month worth of performance there. I kept track of all of last year. Well, I didn't really keep track of it trade by trade. I just sort of accumulated it. And then I felt like, well, we didn't really have to track performance because it was a discretionary system and everyone's performance varies a little bit. But people kept on badgering me. And so I finally decided and capitulated and say, there you go. There's the performance. And we'll keep that going for every trade that we do. All right. So while I'm talking here, the market continues to fall. And my S1 analysis was predicting that it would touch the bottom of the T1 node. Now, when I say the T1 node, you have to, like I said before, this is after doing the analysis and looking at all the historical price action and everything, and then accumulating it and then figuring out where these nodes are. So that's why it doesn't look like there's a node there, but there is. And it looks to me like we're coming down to here. So what I would say, my best guess is that we're going to continue to fall there and probably somewhere at the bottom of that node. So that's where I'm going to pick the the strategy. And so we'll put on a symmetrical butterfly that overlaps the bottom of that node. All right. So what I'll do, yeah, let me come back to the big head here. And I just want to set something up here, make sure everything's kosher. There we go. Let's get a few more of those in there. I'm setting up the options chain if you're wondering. All right. So we have the options chain set up. And now we'll go back to it. And if we look at the chart, we're saying that 38.35 is at the bottom of there. So let's check out what kind of fly that we can put on at 38.35. That would be below. Okay, so right about here would be center strike. Maybe we can go a little bit out of the money. We want a good risk to reward. So we can put on a 5 wide there. And with this 5 wide, we can definitely get a good risk to reward here. And if we did start to move down, we would certainly profit. Let's see what happens if we make that a little bit wider. And I mean, it's not bad. But let's see, 140. Okay, so let's take a look at what the risk to reward is on this. Now, a 10 wide, that would give us a potential of $1,000 minus the debit. The debit is $1.40. So that means that $860 potential profit. So 140 into 860 is about 1 to 6, right? Maybe 1 to 5. Let's see. Let's get the old calculator out and say 140 divided by 860 is, okay. Is a little over 1 to 6, as I said. So that's it's a little tight for us. I mean, I don't know if I want to spend that much on this trade. So let's take a look at let's go for the 5 wide. The hell? What the hell? All right. I mean, if we move into this and it moves anywhere close to this, maybe we can go a little closer. Maybe we go to 30. All right. So now 30, that's 45 cents, 50 cents, let's say 50 cents. That's potentially $500 wide. So that means 450, 5 into 450, or 50 into 450 is 9. So that's 1 to 9. I like 1 to 9 better than 1 to 6. So let's put that on. All right, we got 50. Let's give that a shot. And it filled. It filled. All right, so now what we're banking on is for price to continue down. So we have a trade here. You can now move this this trade here down here like this. It's only 5 wide. It's going to end right there. Let's go back and find out where the break evens are. At 35 and 25, almost exactly. All right. So we'll make that one 38.25. Oop. And this one 35. All right. So there's our target. We can zoom in on that maybe to 1 minute. All right, there we are. Maybe a different color to differentiate it from that time. We'll make it a nice fuchsia color. All right. Now, of course, the actual profitable area is going to be a little bit closer. So let's find out what the break even is. The actual break even. It's at 42, and it's moving. 16. Let's say right around somewhere in between there. 42 and 16. And that will change. That'll squeeze as we get closer and closer. So let's adjust its coordinates. 42. Oh, it's pretty close. And 16. So there's the profitable area. Let's make it a little bit different color. How about a nice orange? Make it a little skinnier too. All right. So we just need price to stay inside of that orange and hopefully get inside of the purple, and we'll be golden. All right. So did everybody get that? Okay. So Steve wants to know, can somebody describe the PDT hack again? So let me explain what that means. He's talking about the pattern day trader hack. And with the SPX, because it is an equity or considered an equity, it comes with the pattern day trader rule, even if you're doing options with it. What that means is that you cannot do 3 day trades in a 5-day rolling period, more than 3 day trades. If you do, then your broker is going to tag you as a pattern day trader and they're going to shut you down for 90 days. So we've come up with a hack, a way of getting around that by still using the PDT. But what it really involves is creating the exact opposite trade using now. So for instance, this trade is done with puts. So we would create the exact opposite trade with calls. And instead of buying it, we would sell it with the same price. Then we would execute it at the point where we want to lock in the profits. And then we would let both of them expire, go right into expiration. And by doing that, by allowing the trade to go right into expiration, you're not actually closing that trade in the same trading day, and you do not get tagged a pattern day trader or get a pattern day trader mark. So that's how you defeat the pattern day trader rule. Another way to do it is you could have two accounts, I guess, with the same broker or different brokers, but then you have to kind of manage your money across those two, and that could um, that could have different effects. You know, you could lose a lot in one and gain a little in another, or gain a lot in one and lose a little in another. It's going to be weird, but that is another way to do it. So I could have gotten a better price had I been a little bit more patient, and maybe have gotten that 10 wide. Let's see what the 10 wide looks like now. Maybe not. It really didn't move back that far. We're in still good shape. It's only 3:07. There's 53 minutes to go. It's amazing what can happen in 53 minutes. So if you want to see what can happen in 53 minutes, go check out Friday's trade, right? So on Friday, I was actually doing a podcast, I think, and we were going to talk about a particular subject, and a trade was still on, and it was, it was a halfway decent call, and it was going into expiration, and in the very last seconds, literally the last minute, the trade jumped up and got into the profit tent, and got about a third of the way, maybe halfway towards the center strike. So it wasn't a pin trade, but it went from being worth nothing to being worth a few $100 in like just a few seconds. It was exciting. But that was the call all along, that that's what was going to happen. And it had skated along the bottom of that spread all day, just kept on bouncing off of it, bouncing. And then the last minute, it jumped up. It was cool. So it looks like the price is starting to move away. So as I said, the original call from this morning was to come all the way to the bottom of this volume node. Now, really got up some muster though this morning. Look at this; it went all the way through. This is the other spread. This is the bullish. I'm sorry, the bearish spread that we put on. Went all the way through it, like it wasn't even there. But with all that momentum, you would think it would still want to go down. So let's see what happens. So Yort P says the market turned at the start of power hour. And he says that might pull up to 38.55, 38.60 area. Okay. It might. Then drop. Okay. Got to read everything. Oh, I'm sorry. Greg says that he can't see the trade. Can you type it in? Yes, I can. Let's see. Copy the trade. And then I'll put it into the chat. There you go. I don't know if it's probably worth a little bit less. It's worth 45 cents right now. So if you get it, you might be able to get in at a better price. But it looks like it's starting to move our direction. Let's check this out. All right, we're going. Here we go. We're on our way. I shouldn't encourage it. That always jinxes you. So that's the live trade. Let's widen that a little bit so we can see it a little bit better. We'll make it super wide. There we go. Sun jumping on me. All right, nice and wide. Are you in the SPX or ES? Oh, that's right. In the chart, I was showing the ES, but that shouldn't matter. It should be pretty close. Let's see. We go to the charts. The SPX right now is 38.44. And the ES is also 38.44. So they're like pretty close to each other. Maybe a point off. So close enough. But you were right. Let's see. We have the SPX up here. They're off by about 2.5 points. 38.47.25 and 38.40.50 or 38.40.79. So 2.5 points they're off by. So the SPX is actually a little bit lower. So that means that we need to take this and move it down about 2 points, or 2.5 points, like right there. And move this one down a little bit, like there. So now that would be a little bit more accurate. So let's hope we're forming a little bear flag here, and then it comes down and it goes whoomph. So this will be the first out of 50 attempts that we make starting at this earlier time. There are other things that we're going to change along the way from what we did the first 50 trades. But I fully expect that our performance will come out to somewhere around 55%, with probably something on the order of maybe an average of 150 to 175% return on our risk that we put on. That seems to be about the average. It's getting a little strength here now. We don't like that. We want weakness. So let me see. I'll show you the, let's get the big head back here so I can manage some of this here. And we'll show you the actual performance of the system, or my performance, as I had said before. But it's the same that you'll read on the website. And so let me go to it. So this is my trade log of all the trades. So right in here in the middle are all the trades. And on the right-hand side is a frequency distribution, and that's what you're seeing up here. You can see that we have most of our trades are in the, let's see, from 9 to 23. So down here, that would be, most of the trades are like right in here, as you can see in the $175, $100, $275 range. And then there's some that are way out here, outliers. There's one at 725, one at 925, and one at 1125. So you can see that we get a lot of outliers too. And then the actual performance. All right, so this is the performance. And you can see over the past month or so, a little bit less than a month, we've made about $2,800 on 20 trades. So the average winner is about $188, $189, almost $200, and the average loser almost $50. Our win rate is about 55%. So that's about right in the long term. And that's what we've noticed, after doing this for almost 2 years, year and a half. And actually, I've been doing this for a lot longer, but that's about the win rate that we get. But you can see that the biggest winner is way bigger than the biggest loser. And the important thing is the drawdowns. Drawdowns are very small. So that gives you some insight on to the performance of the system. I know that this is probably different than what most people feel comfortable with. In other words, most people like these high probability trades. The problem with the high probability trade is that your winners are very small and your losers are very large. And you do not have the same kind of long-term positive expectancy. As a matter of fact, most high probability systems have a negative expectancy. However, it placates the id of traders because they're winning a lot. And then when they get these big losses, they can almost shrug them off and say, well, I can fix that. I can maybe change my trading psychology, or maybe I was just, I wasn't as familiar with the strategy, or I could update this new indicator, or blah, 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 blah. But they'll still get those big losers and continue to lose. And so it's very difficult to, and they'll shrug that off, and then they feel fine getting a lot of winners, a lot of tiny little winners, and then the occasional big loss. And that seems to be okay with most people, even though it never gives them a long-term positive outcome. So moving to a low probability strategy, which actually does have a positive outcome, and it's much easier to trade, lower anxiety, true positive outcome. It's hard for them to handle the fact that they might be losing 45% of their trades. It doesn't compute to them. JP wants to know, do you include the last hour trade in that record? No, because it's an experimental trade. All right. At the end of the experiment, after we've done 100 instances, now this is the second half of that, going for 100 trades. We'll take a look at everything that we've learned from there and decide whether or not we want to include it into our strategy. But, overall, the performance has been pretty good. And so we could include it there and it really wouldn't change our stats all that much. I don't know about this. See, we got this little wedge thing going here. I'm wondering if we're going to break out to the upside now, if that was it. And so our first trade might be a bust on the second half of this experiment. So if it breaks out of this volume node, there's a good chance that it will move very quickly up. But we'll see. Still a lot of time. It's only, there's 40 minutes to go. So I had answered this question from JP. He says, do you include the last hour in that record? What I've been doing is I've been keeping a record, sort of a pseudo record, in the description of the trade itself. So I'll make that record a little bit more comprehensive this time. Before it was just, hey, did we win or lose, and what was the return, etc. But I'll keep a more detailed record so that we can see exactly what the stats were on the second half. And the reason why I didn't really keep the record, because at first I was, it was kind of loosey-goosey. Let's just try this strategy. Hey, let's get on air and do a final hour trade and just keep track of it. And so that's what I did. And then, after doing about 10, 20, 30 of them, it was like, well, it's a little bit late now to start keeping detailed records. So just kept track of the wins and losses and the overall return on risk. But on this next 50, we'll keep very accurate records. And I can see us doing this on different types of strategies that we come up with that are all based around 0 DTE. And I think it's a lot of fun. I think it exposes what we do here in the group and, teaches people about collecting premium on that final day of expiration and the efficacy in doing that. So we're way out here. We need to move in quick. It's a long ways to go. But if this is a bear flag, then we could very easily drop down into there. And there's lots of time. It's 3:24 right now, meaning that we have about 36 minutes to go. All right, there's a good question. How much time is in the volume profile? So we go back all the way until there is some other volume in order to get a proper volume profile, which goes all the way back to 2021. Does it go back to 2020? It goes back about 18 months. So, yeah, if you, excuse me, if you were to go and look at my earlier video from today, you'll see me actually building this structure. And so you can see exactly how I did it. And we do that every week, every Monday, get a new structure out there. It doesn't really change that much, but it's good to just get a fresh look at it and new lines on there to get all the annotations off. So today is a brand new VP. from last week. It's all one of our processes that we take on. Everything that we do is all about process. So a lot of traders are very focused on outcome, right? How much did I make? How much do I make per week? And that's not what we do at all. We know that this strategy and method and process have a long-term positive expectancy, but it's all determined based on our ability to execute. And our ability to execute comes down to our mastery of the various aspects of the strategy, all of the fundamentals, the basics, and doing everything right. And so we put it all together and we put it into a process or a number of sort of stitched together processes, and we become obsessed over that process. We constantly put in the work, we review those processes, we turn it into a continuous improvement process so that each process is like, well, it's an agile methodology where we break everything down into small time boxed units. And of course, a trade is probably the perfect illustration of that. It's a time box unit. It happens within the context of one day. And then a group of trades in a week happen within 1 week. And every week we have a retrospective where we review everything that we did. Every day we review what we did. Now, every day we don't review as a group, but the weekly we review as a group. Each person is sort of tasked, that's their job, is to review their trading every day. And then if they, also along with their journaling, they should be able to detect patterns of behavior that are either working for them or working against them. And they'll enhance the ones that are working for them, and the ones that are working against them, they'll find out some kind of cessation to that problem, right? A solution to it. And that usually involves something like changing a habit, right? So they'll change a habit that will reinforce better behavior so that they can solve the mistakes that they made on that process pattern, that negative pattern. So that's how we do things. So we're moving in the right direction. That's all good. According to this, we're profitable right now, but not by much. If I include the, I'll include the commissions, so that will give us a more realistic view. But definitely moving in the right direction. Got to keep on going down. Come on, baby. You can do it. You can do it. JP says, I followed some of Axe 0DT picks. It's a nail-biting experience. Yeah, that's because we do things exactly the opposite of Axe options. Same thing with all the other 0DTE services out there. They're all doing high probability trading. They put on huge risk for making small profits. We literally are 30 times more efficient with our money than they are. In other words, let's just think about this. For every dollar that they make, right, or for every dollar of effort that we put in, they put 30 times the effort, or 30 times the margin, or 30 times the risk to make the same dollar. I'm assuming that you're talking about the volume profile. You have to go back that far in order to be able to see the profiles, because this has been such a correction that there's no recent data or no recent price action to be able to create a profile to you know, to create a structure. So you have to go all the way back to where it was before. So how are we doing now? We're doing pretty good. You know, 30, 20, $30 of profit right now. Getting close. Oh, actually, this should be going up. This should be at 34. That's where it says it should be, right there. Come on, make a new low. Every time it makes a new low, it drops down a few more ticks. Still a lot of time. You got 28 minutes to go. It's going to find some support here on the edge of this node on this cyan line. So that's going to be a tough one to get through, I think. Or not, but usually that's what we'll find, that we'll get some support right at the edge of a node as it enters into this volume well, which has much less liquidity. That's why we map these things out. The liquidity in this blackened area is far less than up here. So that's what we're banking on, that once it gets in there, it'll slip on in. Of course, we need to set up our trade such that we're going to be ready to take that off. So how are we doing on profit here? Well, according to this, we're in profit. Is that right? Huh. Yeah, I guess so. We're doing okay. Just going to stay in here. So my, this is off. It should be more like that. So, like I said, right at this line, right at wherever this is, at 38.35, we're going to find some support. It's going to be tough to get through. But we got to get ready to take that trade off. So, yeah, going the wrong way. Let's go back to the big head. All right, I'm going to do a little house cleaning here. Let's see. Set this up. Put that to a different group. Oh, it's up $42. $35. It's jumping all over the place. So I need to create a closing trade. What I pay for this? I paid 50 cents. And it's currently at 80, 70, 80 cents. All right, looks like we're going back down. So we can see it right here. It says $40 to $70 profit. I don't know, whatever that is. I mean, it would be nice if we just hang out here for the next 20 minutes, or actually less, 17, no, 13, I'm sorry. Yeah, 23 minutes. If we hang out here for the next 23 minutes, this profit line is going to rise, and we could end up making some nice gains here. But we have to be careful that it doesn't shoot right through. Let's mark off the center, where the center strikes are. Center strikes are right about here at 38.30, right there. That's where max profit is. You know, I guess I could just say, hey, screw it. Let's just take the profit and start off this whole thing on a good foot. But no, that's not what we're here for, is it? See, the problem is that there's really no real support around here. And so I don't know what will keep it there. See, like, look at that, Should I really, I think I should really be taking that off. $1.15. Let's see if we can get that. Can we get 90 cents? Is that what I'm asking? I thought I asked $1.15. I must have just pressed the button at the wrong time. Let's do a cancel and replace. Let's try for $1.10. It's better than 100%. So we'll keep that there, see what happens. The value is like all over the place. So pretty soon, this profit 10 should really be rising quickly. I mean, we only got 20 minutes left. And it's just amazing that it's so low. You'd think it would be way up here somewhere. That's the tough part about getting into the profit tent so early. See, the other thing that's working against us is that because price has been coming down, that means that implied volatility has been rising. And even though time is on our side, implied volatility as it rises makes it more difficult for that profit curve to go up. And that's because a butterfly is vega negative. In other words, it becomes more valuable faster when as volatility or implied volatility is falling. And so that's what we're experiencing right now is this sort of volatility crush, sort of in the opposite direction. So now it's just like way down here. And how is that possible with only 18 minutes to go in the life of this contract? And the profit is way down here. And that's because of implied volatility. Well, Will Do did well. Good job, Will. In at $1.50, out at 3.90 with a 10 wide. Yeah, maybe if I had gone for the 10 wide, it would have been better. But I just did a 5 wide, so it's just so I could get the better risk to reward. But it is so suppressed. Come on, you should be way up here. What is the implied volatility right now? Plus or minus the expected move is plus or minus almost 10 points. That's not good. Yeah, look at this. It's just jumping all over the place. I mean, it's sitting right in the middle and sometimes showing 10 cents. I paid 50 cents for it. It's right in the middle. How can it be 10 cents? Well, the good thing is it looks like it's deciding to consolidate right around this area. Let's hope it stays there. I have a feeling it's going to drop. Yeah, I should have gone wider. I probably would have been out by now. Oh, that's funny. Kramer rang the New York's stock exchange bell today. Kramer, the anti indicator. Yeah, look at it go. Oh, nice job, Steve. In at $1.65, out at 320 with the pattern day trader hack. Even that's awesome. You know, I am on the cusp of getting 10,000 subscribers to YouTube. As a matter of fact, I'm wondering if I'm there yet. Let's take a look. I am. I hit 10,000 today. 10,000 subscribers. I'm at 10,005. Fantastic. All right. Party at Ernie's house. So that's a nice little thing to announce on this live stream. I just hit 10,000 subscribers. Yeah. And it was very hard to get those subscribers back. I had another channel before this one, and I was on the rise. I had like 25,000 subs, and I was growing at like 1,000 a week or something ridiculous like that. And then somebody stole my identity, and they totally deleted my YouTube account as well as my PayPal account and several other web properties, and basically wiped me out. And I started all over from scratch. That was back in May of 2018. And so it's taken me until then 4 years to get to. Now, I didn't really try that hard the first 2 years, but it took me 4 years now to get to 10,000. Let's hope that it now starts accelerating. Thank you, thank you, thank you. That's so cool. 10,000 subscribers today while on this live stream. So now at 10,005. I'm in the big leagues now. All right. Are we going to make a recovery or not? I don't know. Let's see. Where are we? Can't really tell from here. I mean, look. I mean, look. This is crazy. What is going on? That is crazy. Look at the profit curve on this thing. It is just jumping all over the place. It's going berserk. Look at it. It's way up there. You would think that it would. Somebody would be out there to take a trade. Give me my 100%. See, I'm trying to get $1.15. Am I asking for too much? So, Corey, the PDT hack is something that it's not really anything new, but we developed it in our trade room, as a way of getting around the pattern day trader rule with the SPX. And basically, it's a way of getting out without getting tagged, getting one of those pattern day trader tags on you. And essentially, what you do is if you have and it works with butterflies, symmetrical butterflies. So if you have a put butterfly on, if you want to get out, you put the exact same call butterfly, same everything, except that instead of buying it, you sell it. And then you let both of them ride into expiration. That way you don't get the pattern day trader rule, and you lock in your profits and you get out. Before you attempt anything like that, I would highly suggest that you try it in simulation mode many times and get your execution down. Because that's one of those things where you could screw up and then screw up big. All right back up to near the center strike. I mean, we only have 8 minutes to go. Why isn't it not filling? Should I take my order off? Seven minutes to go. Why are you not filling? Yay! I filled. Yahoo! Finally. All right, made 100%, made over 100% on that trade. Fantastic. So that's good. First trade out of the boat, out of the gate on the second half of our drive to 100 trades in the final hour, and it was a winner. All right, well, I'll write down all the stats. I'll start a new stat sheet, and we'll keep track of that. And of course, we're keeping track of our trades during the day, during our normal trades, and those are doing well. Overall, here's the bottom line. Yeah, let's get the big head back here, and we'll go to the fireside chat camera. All right. Here's the bottom line. You can join our service. There's a 4-week trial. Go to 0-dte.com/try. 4-week trial. At the end of that 4 weeks, you can then join it as either a monthly or a yearly member. I think 80% of people, maybe 90% of people choose yearly because they love it so much they want to stay for the whole year. It is an educational experience. It's not just an alert service. You're going to get coached and mentored on how to become a professional trader. You're going to learn our way of asymmetric trading, tiny risk, large potential profit. Right? Once you get into that and are into that process that we espouse and you become skilled, you'll have an incredible skill under your belt, something that's going to have long-term positive expectancy. And you're going to do well regardless of what type of market you're in. You know, I mean, of course, there are no guarantees, and there are some people that no matter what you do for them, there's nothing that they can do to get out of the way of themselves. But it's not a hard strategy. Once you understand all the components to it and you become skilled and put the work in, do your journaling, everything. You know, this is not a cakewalk. This is real work, but for real benefit. So give it a shot. There's your fireside chat. And you'll find that the support here, there's nothing like it in any service out there, period. you will find no other service where the owner operator gives you his personal mobile number, and who also has 40 years of experience as a professional trader, hedge fund manager, uh, CTO of a Fortune 50 company. Let's see, what else? What other accolades can I throw at you? Started my career as literally a rocket scientist. I've been the coach and trusted advisor to the C-level folks of Fortune 5s, Fortune 50s. You get all that for an unbelievably low price. Why do I do it? Because I love to do it. That's why. I don't have to do it. I love to do it. And what I love even more is helping people become successful. That's what it's all about, baby. All right. That's all there is. First winning trade out of this series. And before the market even rung that bell, we'll stick around. We got 2.5 minutes, and the market will be ringing its bell soon. So it's good way to start off the next 50 trades. Made a little bit over 100%. I got into the trade at 50 cents, out at $1.15. Yes, $1.15. So when you include commissions will be about $6. So that will be a return of about 55 cents. So 110%, something like that. Not bad. But on average, our strategy returns probably closer to 150 to 250%, with some trades returning as much as 800, 1,000, 1,500%. I've even seen one person put on a trade. Don't know how they did this, but made like 3,000%. It was crazy. But you don't expect those things. The pin trades, the big returns, we have a nice long fat tail on our distribution curve of our returns. And so you're going to see, regular pin trades where you're going to be making 700, 800, 1,000%. Most of the trades that you make are going to be in the area of 50 to 250%. And then the losses are going to be tiny losses. But they'll be relatively frequent because our win rate isn't real high. And that's really I think the thing that a lot of people have to get their minds around. We do not trade like every other retail trader out there trades, with a high probability, low return, super high risk way of trading. That's not us at all. We trade basically the way most professionals trade. Small risk, huge potential profit. Come on, bell. Get a ring soon in the next few seconds. As soon as that bell rings, we're out of here. We'll play some exit music. Peace to you all. Have a great one. See you next time. Love you.